Hello, everyone, and welcome to our March Roundtable. We are here once again with Steve Saretsky in Vancouver. Hi, Steve.
Good to be back on.
And John Pasalis in Toronto with me here. How are you,
Hello.
John?
Very good, very good.
All right. Well, I know we are a little short on time this month, so let's jump right into it. Let's start with our market update. John, let's start with Toronto. What are the numbers?
So the numbers, we're comparing to a kind of sluggish-ish last year. Sales are up about, I think, 17%. New listings are up more than 30%. So listing growth's outpacing sales growth. Technically, average prices are up a little bit, but I think that's actually more due to like compositional change in the sales. Like I think low-rise sales actually did increase a little bit more than condos. So you have more houses selling. If you actually look at houses and condos separately, average prices are largely flat compared to last year. So what we're seeing is, people jumping back into the market, new listings increasing, which is a very positive thing. On the low-rise market, new listings and sales volume are average-ish, maybe a little bit below average for sales, a little bit kind of in line in terms of new listings. Condos is interesting because condos is seeing a really, really high volume of listings. So listings are surging in the condo market. And maybe that could be some investors just unloading. We still have just about 3 months of inventory for condos, even with the elevated number of listings. So it's still not a terrible market, but it's definitely slower than low rise.
So, John, when you say investors unloading, we talked, I think, last time about a record number of completions
Yeah.
set to happen in Toronto. Are you talking about
Mm.
people maybe doing sales to sell the units rather than rent them out as they planned, or
I
are you
don't
talking about other trends?
That's a good question. So I don't think it's as many of the newly completed units that are being sold. A lot of those are being rented. I believe a lot of, I mean, and I'm speculating, I should say. When I say I think it could be investors unloading, I haven't looked at the data. It takes some time to try to determine this, but I do think that could be part of the narrative, right? When you see this massive increase, because you don't need a huge increase. You need just like whatever 1,000 investors across the whole GTA to decide they want to sell their condos to obviously have a very big impact on the statistics. So I'm thinking it's mainly people probably who had units or maybe just deleveraging. But I'll try to look into that maybe next month to see what the driver of that is. But that's just my initial guess of what's happening.
And quickly, on the ground, am I right in that it feels busier?
It is busier. I mean, there's definitely competition, especially in the more affordable segment. If you're a little bit higher up, like in the 2 millions, it's still busy-ish, but obviously not as competitive. I'm seeing things like failed offer nights, which is for sure like, especially in the higher end of the segment where, people list really low, they get offers, the seller's not happy, so they just jack up the price a lot of times to a price that is well above probably what it's worth. So, but on the lower, on the affordable segment, those homes are selling well, and the ones that are selling on offer nights generally are selling within some reasonable value range rather than, this insanity and this bubble like FOMO vibe. So and that speaks to the offer nights that are failing. I mean, that just says that basically the buyers are constrained. They're not going to what the seller wants, and the seller's kind of the more irrational one, relisting at a much elevated price, right? So there is a little bit of a battle there between the buyers who are staying put and the sellers who are aggressive. But I think that's more of a case with higher priced homes or more unique homes, like the stuff in the low millions is selling quickly.
All right. And Steve, I saw you nodding a bit. So maybe you can take us through the same. Generally, how are the numbers in Vancouver and what is the feeling out there like?
Yeah, I just find that the market is always like seems like Vancouver and Toronto just ebb and flow like it's like a mirror image. So yeah, if you look at new listings, kind of back to like long-term averages, long-term trends. But if you kind of dissect that further to John's point, I mean, we're seeing it like in the data. Single family new listings are like horrific, incredibly low, well below long-term averages. And then you switch over to the apartment segment and you're well above long-term averages. So clearly there is I don't know if I call it a flood, but there's a significant uptick in new listings in the condo space.
typically where more of the investors play ball. And then, you think about who's buying single family houses, entry level point in Greater Vancouver starts at 1.8 million. I mean, it's an end user. It's a family. It's people that have equity already in the market. And so you're just not seeing that inventory coming to market. And on the sales front, things have definitely picked up. Still below sort of long-term trends. But I would say overall, like I think the overall mood of the market right now is sentiment's better, things are moving. It's an okay market. It's very spotty. It's hard to price things. If you've got an entry level house, that's getting multiple offers almost every time. And then you get a lot of the condos that are kind of sitting, particularly downtown. That market just hasn't recovered and rebounded. So it really just depends. I mean, I think like, you know, the general public, I think, tends to look at headlines and, here's, oh, I heard the market's picking up. It just depends on like what you have. It's unlike, like the bull markets of 2021, right? Where like everything is going up. Doesn't matter what you have or how bad of a product is, it's going up and to the right. Whereas in the same thing in 2022, it felt like everything was moving lower. And I just think today we're in this kind of segmented market.
All right. And now it is prediction time. What do you think the second half of the year holds? Let's take the case where if interest rates drop, which they're expected to do later this year. So, Steve,
Oh,
what's gonna happen to the market?
yeah, I'd love to. I'd love to push back on that a bit. I don't know. I'm starting to come around to the view that maybe interest rates aren't going to drop, and if they do drop, they're not going to drop a whole lot. So,
Hmm.
I think that's something for people to start maybe adjusting expectation wise. I feel like the market kind of was trying to front run the Bank of Canada a little bit. Like I just look at it and say like you look at like what's happening right now in crypto markets. You look what's happening in the stock market, and you're like, I don't know. It's kind of a tough, compelling argument to be aggressively cutting rates in this sort of environment. And so I'm not so sure. I think that it's going to be interesting to see like if like you know by the end of this year 2024, like maybe we have let's just like what if we only have, let's say, two cuts from the Bank of Canada. So your variable rate mortgage is still at what, five, 5.57, 5.8. People renewing their mortgages on fixed terms, you might be renewing at 4.8. You know, I think there's going to be a lot of people that struggle. I feel like there's going to be a segment of the market. You hear these stories, right? That people are like, oh, it, that don't have as much disposable income, and maybe don't have disposable assets that they can sell to sort of, refinance and pay down the mortgage and lower the payment. So I think there's going to be a cohort of people that are really going to struggle here. And I think there's other ends of the market, look in Vancouver, the single family market north of 2.5 million. That's just the reality is those people that are in that segment are in a different income bracket. They're in a different asset bracket. And I don't really think that they're impacted today by what's happening in the rates markets.
Interesting.
Interesting. And am I right in seeing some articles that banks are being encouraged now to start extending out those amortizations? I thought I was reading something by Stephanie Hughes that finally
Yeah. I don't know, John.
BMO's.
Have you guys heard anything? I haven't heard anything about that. I've just heard, some stories. I had one recently where it was kind of interesting, where it's like there was an individual, a borrower that was negative AM, right? So negative AM, which basically means they're not even paying all of their interest on their loan. So the amortization is blowing out. The loan is actually growing. Um, and they went back to the bank and actually got a larger loan. They were able to actually take on a larger mortgage. So it was like the bank just seemingly did not care that this client was already in a negative AM situation. So I think that's fascinating from what's happening from some of these banks' perspective. Is it's like, there's clearly a problem for quite a few of these borrowers. I think what's the latest bank earnings, like, some of these big banks still have 13, 14, 15% of their book as negative AM. And they're just letting them sort of extend and pretend, and the bank doesn't want a foreclosure or a loss, and they're just aiding and abating these borrowers.
We got to keep the housing market pumping, and that's the way to do it. So, I mean,
Yeah, I've just thrown that headline up here. Sorry, John. It's the Bank of Montreal cuts exposure to ultra long mortgages. It was definitely used for Bloomberg News. And just the point that I think over uh, a third of their portfolio had amortization periods extending 30 years. So it looks like some banks are now starting to look at this and want to bring these numbers down. So that could add to some of the pressure that Steve's talking about.
Steve, why do you think, or what makes you think the cuts are not going to, like, there's going to be maybe later or not as many cuts out of curiosity? Like,
I just think like, I feel like today, like the market, particularly like housing market and financial markets, which obviously drive a lot of wealth, like people that have, I just feel like that those markets haven't really rolled over. And so it's like, normally when you think of like aggressive rate cuts, you're like, well, like, there's this recession and, housing is down 10, 15%, stocks are down 20%, like cut, 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 cut. And like you look at it today and it's like, well, why are we cutting? I mean, like the stock market's at all-time highs, crypto markets are ripping, housing looks for the most part not that bad.
mhm.
Especially in the US. I mean, how like housing in Canada though, like as we talked about in the beginning of the show, like it's okay, it's moving fine. It's there's pockets of the market that are struggling, but like I just don't think there's a strong case to be like cutting rates by like 100 basis points.
Interesting.
We'll see.
I'll,
But I mean,
I'll take I'll take
John,
the flip side. I'll take the flip
I
side.
think there's a lot of issues on the pre-sale side and some developers that are going to go bankrupt and the office space is definitely a mess. So like there's issues there, but I feel like it hasn't gotten that bad yet.
Yeah. I mean, I'll take the flip side. I think we might see closer to 100, and I think partly because I think the economy is doing a lot worse than most people think. Like I think a lot of small businesses are hanging on.
Yeah.
And I think to me that's the reason. Like, and yes, you're right. Housing's still going to be busy, whatever. The market's busy, the stock equities are fine. But if we start hitting more businesses closing, more bankruptcies, people pulling back and not spending as much. I suspect this might lead to more cuts.
Yeah.
I don't necessarily think that is and I think some realtors see that as a bullish case for housing. I don't think it necessarily is because even if that pushes rates down to the fours, right? Um, I don't think we're gonna have like a crazy bull market. Like, if you have a backdrop of recession, that obviously changes sentiment. But also, I think the big difference is from last year, this time when we hit the fours, is I think listings volumes will be higher. Last year, at least in Toronto, the market ripped when rates hit the fours because we had a 20-year low in new listings, not
Yeah.
because demand was off the charts, right? Demand was kind of okay. So I think if like the decline in rates is offset by an increase in listings, it's kind of a wash. So I don't know. And I would think the market just stays flat-ish. I mean, maybe it goes down a little, maybe it goes up a bit. Who really knows? But I don't think it's going to be I think most people are expecting rates will drop and the market will go on fire again. And I'm not convinced that that's going to happen personally, and not this year.
No, yeah. I mean, I think you and I are on the same page there. I don't know. I mean, like I said, I think I've been surprised that, if you asked me 2 years ago that, interest rates, mortgage rates would be, let's call it 500 basis points higher. Mortgage rates have effectively have
Yeah.
tripled, right? I mean, we've
Yeah.
gone from 1.5 to, I
Mhm.
mean, north of more than tripled.
Yeah.
And really, we're talking about prices down, like in the city of Vancouver. I mean, we're down 5%.
That's crazy. That's nothing. So
Like
we're
you go to the suburbs, sure, the suburbs are down 10, 15%.
wow.
But city of Van, 5%. Like,
That's
that to me is
crazy.
incredibly surprising. That was not
Wow.
on my bingo card. And so I just felt we would have had a steeper correction and that would have spurred the rate cuts probably sooner. But we're sitting here and things look I agree with you, though. It definitely feels like a market of like sort of that's dividing between like the haves and the have-nots, like people that are sort of in the upper end of the wealth scale, I feel are still spending and are relatively not that impacted. And then you're seeing, I think, a cohort of people that are really falling behind. So I do agree with you. It's definitely, concerning from that perspective.
Yeah.
I actually, on that note, want to turn to some great questions we got in from our Twitter. Thanks, everyone. From Ralston727, I want to throw up this chart that they've shared about total housing starts in Canada. And they note data shows us that the housing starts peak 3 years prior to a housing downturn. In a housing-driven economy, building permits plummeting like they are now will mean millions with reduced or no incomes. The point being there that construction is a big sector for Canada, given the importance of our real estate market. So we have been hearing about canceled projects. What are the chances, and we know starts are down, what are the chances that real estate itself or construction element of it is the segment that leads us into a recession?
Yeah, that's a good question. And I think there is like a decent amount of economic theory. There's that classic paper by was it Leamer, I think, Housing is the Business Cycle. And the argument is exactly this, that leading up to housing starts decline, this kind of leads into a recession, jobs are lost. And I think that there's a good argument to be made for that. I'm not as convinced that that's going to happen right now for I think one main reason, that if you look at the number of units under construction in Canada, we're basically at a record high, right? And we're at a record high partly because the type of housing we built has changed, right? We've gone from low rise to high rise. That's a longer construction cycle, which means those projects are in the pipeline for a lot longer, right? So I think this idea that decline in housing starts leads the business cycle and jobs are lost, I think that theory makes well in economies where you're disproportionately building low-rise homes. The construction cycles are shorter. You start, stop, whatever's in the pipeline is done in a year, and there's very little building going on, right? Whereas if construction starts hit zero now, there are still a lot of projects in the pipeline, and it will take some time before we see a huge decline in units under construction and job losses and all of that. So not to say that there isn't some truth. Certainly, if starts decline, you'll see probably some downward pressure on construction prices. Maybe you'll see some softness, but I don't think it's going to be the type of downward spiral that you would get if your housing sector was largely building low-rise homes. I hope that makes sense. And I don't know, Steve, what Steve thinks.
Yeah, it's a good point. I don't know. I think that the construction space, though, is definitely pretty weak right now. I think that there's a lot of, like, to your point, there is a lot of projects that are in the pipeline that are actively being built, but I think like new shovels entering the ground, like projects in the planning stage are obviously not very active. And so I think as these apartment completions get closer and closer, there's going to be fewer work to go around. I think we're starting to see that. We're seeing that in construction pricing. It's starting to come off. Contractors, tradespeople starting to take, put in lower bids or adjust their bids to make projects more feasible. You're hearing a few stories here and there of developers laying a few people off. And so I think that's going to continue. I think that it's really hard to pencil new projects today, given the whole environment. And so, I think we'll wait and see. But it does bring that interesting dilemma, right? It's like you've got a decent pipeline that's actively in the pipe, and that's going to complete, and that should keep your housing market adequately supplied over the next couple of years. And then as you push out, 3, 4, 5 years from now, the projects that aren't getting started today, you're going to see those reemerge. And so that's why I think we're going to come full circle of talking about housing affordability 5, 6 years from now. It's going to be the exact same conversation, which is housing is still not affordable.
All right. Well, thanks. On that note, I want to try something a little bit different today. So thanks to, again, all the great questions we got into our Twitter from Scott R and Dad Jokes and others. Thanks. I'm going to try a quick take. So short answers on what you think about the following policies or measures as to whether they are helping or hurting our housing affordability crisis. All right,
All right.
ready?
Sure.
Start. BC flipping tax. Steve. And maybe just briefly explain that BC has introduced a new.
You want me to walk it through?
Yeah. Give
Sure.
it to us quick and then tell us what
I
you
feel
think.
like Ontario's probably gonna do it next. BC flipping tax. If you buy and sell a home, whether it's your primary residence or it's an investment property, if you sell it within 2 years, the first year is taxed. They'll take 20% of the profits, and then it's a sliding scale from that, from year one after year one to all the way down to zero at 2 years. So basically, they're going to take part of your profits. Now, on the flip side, people like that maybe aren't aware is if you are flipping homes, or if you flip a house in the first year, you are taxed as business income. Okay, so for example, you're already paying CRA. So the BC government's just coming in for their pound of flesh on top. So, for example, if you bought and sold a home within 12 months, you'll pay the CRA top marginal tax bracket in BC. So you'll pay, I think, 53% there. And then you'll pay the BC government another 20. So 73% of your profits are being taxed. Obviously, basically eliminates flipping. What do I think about it? I think that flipping is a red herring. I think it's a scapegoat. I think that it's easy political points. It sells well, so I get it from the government's perspective, but it won't do anything to increase affordability or make the market any better. Also, what I think is going to do is it's actually going to hinder supply because investors are the main buyers of pre-sale condos. And so what's going to happen is they're going to end up getting taxed significantly on when they've got to flip. Anytime a building completes and closes, John, you probably know this, on any given year when the building completes, probably 15% of those units turn over. So all those 15% are basically going to get hit with the flipping tax. So if you're a pre-sale buyer or investor, why the hell would you even consider buying pre-sales knowing that you're going to get penalized when you try to exit this thing? So, and the answer is no, end users are not going to absorb the difference from investors pulling back because most end users don't want to wait 4 years for completion.
John, flipping tax in Ontario, yay or nay?
If we had it, I mean, listen, I'd have no problem with it. I think I'm fine with any policies that curb speculative behavior. I don't think it would have a huge impact. Like Steve, I don't think that is a huge driver. I think that was a driver when prices were rising 25% per year. No one's flipping when prices are flat, no one's buying a property to flip it today. And by flipping, we should largely say not renovating, because I think, renovations, I suspect, would be exempt, correct?
I don't think they are.
Oh, they're out of here.
No, I don't think they are. Not to my knowledge.
Okay.
We'll wait and see when they finalize the legislation, which comes into play in January 1st, 2025. But yeah, to my knowledge, they don't. So again, you think about like a dilapidated home, who's going to rehab that housing stock, that old housing stock? The end user most of the times isn't going to, because it requires a particular skill set, it requires time, and it requires a lot of capital.
I mean, they would have, okay, that's idiotic. They should be exempting. Okay, maybe not like quick, cheap flips, but they should be exempting new construction, or,
I
especially.
think they do. They exempt new construction if you're adding a dwelling unit. So, for
Okay.
example, you're
Oh,
renovating an old single-family house, but you're adding in a legal basement suite, or you're adding a laneway house in the back. Because you're adding a dwelling unit, that it'll be exempt. But like, I
interesting.
think taking like an old leaky house that you probably might not be able to get bank financing on, and going in, rehabbing it, spending $300,000 and putting it back on the market. My understanding is that is not going to be exempt.
Fascinating.
Are they going to be hiring a fleet of inspectors as well? Anyway, interesting. All right, let's go. Rent control. Steve, yay or nay?
I'm not a fan of it personally, but I'm also like a free market person. I think that I think it's well intended, but the consequences I think what we're seeing today, John, is anyone, the CMHC just put out a report saying turnover rents for 2023, turnover rents in Vancouver were 33%. So when a unit comes up and hits the rental market again, the rents are getting pushed up dramatically. The reason for us is like when you have these right now, we're capping rents in BC below the rate of inflation, below the rate of maintaining units. And so no tenant wants to leave. So there's no upward mobility. People just get locked into these old or these below market rentals and nobody leaves. And so it makes the available supply for prospective tenants is horrible. And that's why you're still stuck with a sub 1% vacancy. And then anytime the rent turns over, landlords have to jack it up because they know they're going to get penalized once the tenant's in there. So I think it ends up hurting the supply side more. That's my opinion. But
So
John?
I'm going to take the flip side.
hey, finally we don't agree on everything.
I'm all for rent control. I think tenants should have some rental security. Do I think the
What's the
level
right
of
number though?
well, exactly. I think that's the challenge. I mean, in Ontario, I mean, does it make sense that it's 2% when inflation's 8%? I mean, I don't know if that makes sense.
I would actually somewhat agree with you on that. Because like so the previous BC government, it used to be inflation, so whatever the CPI was plus 2%. So you're like, okay, well that's kind of a reasonable number. Where like, but now like we're seeing right is like this year we had 3.5%, while inflation was like 5%. And it's like everybody knows cost of insurance, mortgage interest, maintenance of the building is well north of 5%, in my opinion.
Yeah. So, I mean, whatever the right number is, I think we should have it. And I don't buy the argument that purpose-built rentals aren't being built because of rent control, because Ontario didn't have rent control for decades. And we didn't build any purpose-built rental. Like, anything that was built after the 90s largely wasn't rent controlled. And we still didn't build purpose-built rental. We just built condos that were converted to apartments. So I don't think the lack of purpose-built rental is just a rent control issue, because now we're starting to see increases in purpose-built rental. So
How much of that is like the financing aspect? Like to my knowledge, the only reason why people are building apartment buildings is because CMHC is like gifting very,
yes.
very favorable loans. And now the feds have obviously removed GST.
Yeah, exactly. So I think that's my point. It's like
Yeah.
it's things beyond just rent control.
Oh, totally. Yeah. 100%.
There you go.
All right, let's move to changing the mix, maybe zoning. Fourplexes. Question. Big fanfare over fourplexes, a lot more density happening in Toronto and across BC. Helping or hurting? Steve?
I think it will help over the long term. It's not going to do it. No one's really building them yet or today. I mean, the economics are still pretty tough, but I'm a fan of it. I think that, John, I don't know what your thoughts are, but I think the density that I think a lot of people like or prefer or like that we need is like these families. Like, I don't think there's a lot of families that want to be in a high rise raising kids. We just don't like. I'm not a huge fan of high rises in general. I just don't think they're the greatest product. I think we like build lots of low rise, affordable wood frame. There's no underground parkade. They're cheap. They're cheap, quick, and easy to build. They're much more accessible as opposed to these big, fancy high rises where like concrete's incredibly expensive. The cost of insuring these buildings is becoming more and more expensive. And, strata fees on a 3-bedroom condo are astronomical. And so I think from a product type, even if there's a reason why developers don't build 3-bedroom high-rise condos is because there's no demand for it.
Mm-hmm.
And strata fees, it's monthly condo fees. You call them strata fees in BC, right? Okay.
What do you guys call them?
Just condo fees, monthly condo fees.
Yeah, same thing, yeah.
Good. I mean, I think we should. I think I agree with Steve. I mean, I think they're generally good ideas. I mean, more density is better. I don't think we're going to see many of them built, and I think that's the interesting thing. I mean, the feds are pushing fourplexes like in every region, like as if every region wants to build fourplexes. Like just because you legalize something, it doesn't mean that there is a market for them or that the economics work. I think it is huge. I mean, I personally think that the bigger things that they should have done and especially in the Toronto area is, number one, if they could have found a way to legalize them as end user housing the way they do in like the UK, for example, or even in Montreal, where you can separate those out into 4 units and sell them as like a mini condo, that would have had a bigger impact than just requiring an investor to keep them as rentals, which is basically what the rules are now.
Hey, John, what's the standard lot in the city of Toronto? Like, what's the standard size?
Like 30 feet. I don't know.
What is it, like 30 by?
I don't know, like 30 to 40 by 100 and 120, something like that.
Okay, so the standard in the city of Vancouver is a 30, like typical. Obviously, we have some lots that are a little bit bigger than others, but like on average, the general lot size you most commonly see is a 33-foot wide by 122 depth. So 33 by 120. So the 4,000 square foot lot. Um, the issue with the fourplex stuff is like, how are you putting 4 units on a 33-foot wide lot? Very, very difficult to do because you basically like you can't split a 33 up the middle
Yeah.
and have like four like a square. You almost have to go up,
Yeah.
and so that's why like I think you're not going to see fourplexes on a 33 by 122. You might see a triplex where you go front back duplex style,
But
and
why
then
don't you just go? Can't you just go 3 stories up, 1 unit per floor? Do they not allow 3 stories there? Because
well, then
here
how do
you
you
can go.
access those floors, right? Then you have to have like stairs, and so I think from the building code, it's
I
no
don't think
more.
that's a huge deal. You just have a shared stairwell. Like a lot of homes here in the West End were built like that, where they have one front stairwell
Yeah,
and then they have one in the middle of the home that is just like almost like an emergency one. So
yeah. So I don't think we have that in our building code yet, but they're talking about amending that to allow like the
interesting.
sort of walk up style like buildings.
Yeah, interesting.
So yeah. Anyways, like you get these like yimbys that kind of fight you on it. It's like, well, have you really thought about how you're going to split a 33 lot in half and try to sell it? Because there's not going to be a
I,
buyer for it.
I think, but even here, even if we can do it, like we can do 1 unit per floor, like I think it's just still economically very hard to do, even if you could do 4.
Yeah.
So
All right, next topic.
next
I
question.
need a timer next
All
time,
right, go.
like on the
These
sports
quick
shows.
these quick takes are not so quick.
They're
Next.
good though. They're good.
All right.
Co-ops are making a comeback. So this is in Toronto. John, there was some, co-op building in the 70s
Yeah.
down in the Esplanade area, sometimes geared towards certain professions. There was like nurses co-ops and other things. So quick hit on what a co-op is, so why it's not quite a condo, and whether you think this comeback is good or bad for the
Yeah, I mean,
housing
there's different types
crisis.
of co-ops. So, I mean, the original form of condominiums in Toronto were co-ops where the whole building's owned by a corporation and you own shares. It's kind of like a condo, but it's structured differently. A lot of condos in New York are still co-ops. So, but when we talk about co-ops in Ontario, generally we're not talking about that. We're talking about what is effectively non-market housing, right? So it's a type of ownership where um, you don't have equity necessarily in the property. It's not for profit. You kind of like have permanent rental housing effectively that is a little bit more affordable. I do think, and there are some of them throughout the city of Toronto. I think it's positive because I don't think we're going to solve affordability just by building small condos and market rate purpose-built rentals. I think we need more what's effectively the non-market housing. So this is not necessarily like social housing or means tested housing where it's way below market, significantly below, government subsidized. It's kind of in between the two. So I do think we need that.
Yeah, my understanding is groups need to bring these proposals forward now and
Yeah.
partner with the city to get them done. Steve, any opinions on co-ops?
Not particularly. I think we don't have a lot of them in Vancouver. It's not really something I deal with. Yeah, I'm supposing that this conversation is around the government being more involved in the building of housing and operating it.
Mhm.
I mean, I suppose like I
Yes and
suppose there's an
no.
argument to be made that when the private sector turns down as it is now, because they're all about profit loss, that
Mhm.
if you can't make a profit, obviously you won't build housing. So I think the feds are trying to sort of counteract that supply curve and say, well, we have basically an unlimited balance sheet, so we'll build it. I suppose that's a good thing. I think at the end of the day, though, is anytime government gets involved, there tends to be a lack of care for funds, and it's, at the end of the day, it's taxpayer dollars. So it's kind of more of like a political view, I guess.
So that's actually our next point, government built housing, whether that's a solution or a faster solution to the crisis. John, my understanding is co-ops, it's nonprofit groups come forward
Yeah,
or organizations.
exactly. Yeah.
So it's not quite the full government built,
Mhm.
although it's assisted. At least that's how it's been happening in the city of Toronto.
Yeah, exactly. I mean, and to Steve's point, you'd think we're in a housing crisis, that starts are declining. Our government knows supply's an issue, that they'd actually start building housing. You know what I mean? Because they could. I mean, 100% they could. I mean, it's not an expense. They're investing in an asset. You'd think governments would be more involved, but they're not, which is really fascinating.
I do wonder though, like on the flip side, when you kind of like look at the full equation. So it's like let's just imagine like the situation where like the private sector is rolling over. The government runs in and says, "Oh my God, like just build, 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 build." And so you don't necessarily get this downturn in like housing starts. You don't necessarily get this downturn in the economy in a recession, right? All of a sudden the construction guys are full tilt, they're fully employed, they're making lots of money. It's like, well, then maybe you don't get the rate cuts either. So it's like you kind of government would almost be coming in, spending the money, and sort of averting like the business cycle.
But that's what they do. That's typically
Yeah,
like typical sort of Keynesian economic, they jump
yeah,
in when no one else is spending and they,
totally.
invest. So,
So yeah, there's always like I guess there's a reaction for every action.
yeah.
So that leads us nicely to the next point. What's the better way to do it? What about low cost government loans to builders? So instead of government building, is that what they should be doing in the down cycle? Yay or nay? I know there
They
are
are.
some
Yeah.
small incentives. Should there be more of it
No,
on a larger scale?
they are, and they've increased the I can't remember what the amount is, but they increased it maybe like 6 months ago, how much they're willing to lend. It's basically low cost financing. And I think it's specifically for purpose-built rentals. So I do think that is
For
huge. Listen, and I
CMHC.
yeah, exactly. Yeah,
Yeah,
CMHC,
I think
right?
that's the right. Yeah, I think that's a good program. Yeah, CMHC. So for anyone that maybe isn't aware, so CMHC, if you're building purpose-built rentals, new construction and ground up, you can typically get 50%, or sorry, 50-year
AMS.
amortization.
Yeah.
You can typically get 10-year terms, below market financing. And then you can technically, I believe you can finance up to 95% loan to cost. So the cost of developing the project. So like, at a big bank, I think you'd be lucky to get 70, right? So like basically what's saying, the government's saying, listen, we'll basically finance the entire project very, very favorably. And this is the only reason why, in my opinion, rental housing is still getting built today.
All
And
right.
those are good policies. I agree.
I think that's good
Okay.
policy. I think it's
Yeah.
the only good thing the CMHC has done in a long time. But
Yeah.
All right. I think there's one yay so far. That one, low cost loans. Okay, let's end on I don't even know, was this a demand side thing? I don't know what it was. The first time home buyer incentive program launched by the federal government. John, I've seen you talking a
Oh
lot in the media
gosh.
about it. It just ended. I think it was just introduced. Is that the shortest program wrap up ever? John, tell us what it was about, what the attempt was, and what you think of it. I'm
So
guessing not
this
much.
was a program CMHC launched. Good God, when was it? 2019 or something like that?
yeah, September 19.
Yeah. And it was basically a shared ownership model where basically the government invests, I don't know, like I can't remember how much was it, like 10% or something like that?
Up to 10%.
Up to 10% of the like of the purchase of the home, and you kind of are both shareholders of it. It's like a shared ownership model. I mean, there were a number of problems with it. Number one, like it didn't really it wasn't effective in the most expensive markets where it's impossible for people to buy homes because of the requirements, like the income requirements and the constraints on that. Like you couldn't really use it if you wanted to buy in the GTA or in Vancouver.
The
It,
The best part of that though was, which I know our buddy Ron Butler was talking about it, was like if you so the government has a 10% equity stake, but like meanwhile, while you're living there over the prevailing 5 years, you're maintaining the property, you're paying for the insurance, maybe you're doing a renovation,
Mm-hmm.
and the government gets to benefit off of all of that,
Yes.
money and effort that you put into the property, and they take their 10% profit when you go to sell. So it's like,
Exactly.
well, not a great ownership structure.
I mean, and if you live in Canada where we expect, where most people buy real estate because they expect prices to go up, I'm pretty confident a lot of people didn't want to give up their 10% growth either to the
Yeah.
government, whether they renovate it or not, right? And I don't know. It felt like this was more of like a political, I don't know, like a political policy aimed at the government saying they're doing something. At the time, there were a lot of talk about, should CMHC extend amortizations? I don't know if you remember that. There's like, and that
Yeah.
was when Evan Siddall was like the head, and obviously he was very against anything. And he was the former CEO of CMHC, so he was very against anything that would have encouraged more debt. So I think this was seen as like a policy that they could put in place that wouldn't have as big of an impact as sort of these wide-reaching, increasing amortizations and reducing the stress tests and stuff like that. So it's not surprising that it failed, but it's unfortunate that we need to do these things to score political points around elections.
All right, I think that was a good round. Thanks,
Beautiful.
gentlemen, and thanks to our viewers for sending in all those topics. You can keep following us on X Twitter at John Pasalis, at Steve Saretsky. You can reach the show at Move Smartly. And I think that's it. All that's left for me to do is say thanks, and that we'll see you next month.
Short and sweet.
Yeah, we'll see you next time.